Hello traders, welcome to GoldMind Traders. Have you ever wondered why whenever you press a trade, boom, you are caught on the wrong side? And the major reason would be failure to understand, failure to read the market structure. Because the market structure is like a reading map of the market. If you cannot properly read the market structure, you always be caught on the wrong side of the market. And in this video, I will explain what you really need to understand about market structure. The market structure, it is either in uptrend or a downtrend. An uptrend is considered as a bullish market structure. A downtrend is considered as a bearish market structure. What you really need to know about an uptrend, which is a bullish market structure. Let me sketch something small here. An uptrend is always moving in a pattern of high, high, high lows, high, high, high lows, high, high, high lows. So you're going to see that this market is forming key points, which are swing low, which you call as high lows, and swing high, which you call as high, high. It is forming high lows and high highs. But now, this point has to be valid. What do you need to understand for you to determine what a valid high is? What do you need to understand to determine what a high low is? That's where most of the traders go wrong here. For us to confirm that we have obtained a high low, we need to know, or we need to discover a break of structure, what we call a B or S. If the market has not yet given us a break of structure, there is no way we can consider any point as a high-low point. You see, the market moved from this point here, where it had formed a high-low, and it went this point here to form a high-high. But now, we expect the market to form another high-low. And after forming this high low, for us to determine that is a high low, we need to find out a break of structure. So when we get the break of structure, we are having a high low. A high low, and we know that after a break of structure, the market will always pull back. Now, what is a downtrend? A downtrend is when the market is forming low, low, low highs, low, low, low highs, low, low, is forming low, low, then low highs, low, low, then low highs. And you're finding out that even here, the market is breaking structure. At this point, where the market breaks structure, this point is considered to be as a low high point. At this point, where the market breaks the structure, this point is considered to be a low high point. Good. Now, you are finding out that this is theory, but in reality, how does the market move? In uptrend, if we have obtained our first point as a high, and we expect another point to be a high, low, then we expect another point to be a high. But for us, before determining that this is a high, low, we need at least to have a break of structure here, what you call a BOS. After having a break of structure, now we confirm that there is momentum. There is a buy momentum in the market. We expect a pullback, but this pullback will never come as straight as you think. We expect a pullback here. It can do anything it wants. It can form other structures. It can do whatever it wants. But we expect another point to be formed. And this point immediately on the break of structure, we are considering this point as a high low point. And now after the break of structure, we consider another pullback. What's the reality about the downtrend? We are going to have a low low, then a low high. We are going to have a low low here and a low high. But here the market can do whatever it wants. It can form several patterns. It can do whatever it wants. But for us to consider this one as a lower high point, we need to determine a break of structure here. Break of structure. Then we have this one as the lower high point. And immediately after the break of structure, we expect a pullback. And we expect this one to hold and the market to continue in a down trend and to continue breaking structures. Let's have this one on the real chart. Let's find it on the real chart. So this was a screenshot that I took on gold. On gold. Well done. So what are we seeing here? We see that from this point, we see that there is a break of structure here, B, S. And immediately after the market had break of structure, we saw a pullback. This pullback, our high low formed here. We see another break of structure here, high, high. We see a pullback. We see a pullback, which is a high, low. Then we see continually the market broke another structure from a high, high. Good. Now we are going to talk about change of character. What do you need to consider for you to have a valid change of character in our next video? But for the purpose of this video, let me skip and go directly to the downtrend. See this point here. The market broke this structure BOS. And after breaking this structure, it pulled back here. And it formed a lower high. Then after it continued to break structure B or S, and it formed a low point. It pulled back and formed a low high point. Then it broke structure here. It formed a low point. It pulled back and formed a lower high point. Then it broke structure and formed a low point. So you see that whether you are trading Forex or you are trading commodities or you are trading crypto, the market will always move in a break of structure in this pattern. To always keep breaking structure, pulling back. But now your role is to understand what is a valid break of structure, what is a valid high high, What is a valid low? There's something here I write down that the swing high is the highest point that was in a swing low, and the swing low is the lowest point that was the swing high. After every break, expect a pullback on the same time frame. Consider this word, same time frame. So if you like this video and you find it useful, please remember like subscribe because this is just